Hi, Anton. Let me know if you can hear me. Yeah, I can hear you perfectly. I'm doing well, thank you. And yourself? Well, I'm glad to hear you're recovering. Indeed, indeed.
Yes, I can hear you. Hi.
We're doing here today. Startups fell.
No worries, all right, Paul. We'll do. No worries, bye. Oh.
Hello, it's really great to be here again. So I am Harriet. I am a chartered accountant, a fractional CFO, and trauma-informed finance coach. So I work with creative and purpose-led founders who are building things that are kind of changing the world for the better. I run a fractional CFO practice called Below the Line Finance, and I tend to work with everything from pre-seed, raising investment, through to larger companies that have got, a bit of funding under their belt, and very much, kind of cash flow management, lots around sort of founder dynamics and sort of emotional side of money as well, bringing in the kind of holistic edge to it, but very much kind of growing all the good stuff, really. Really great to be here.
Hi, I'm Andrea Richards. I'm an accountancy practice called Accounts Navigator. We specialise in management accounting, making sure that all our clients understand how to make the right decisions to build their business and move their business forward.
Sorry,
Yes, Michael.
someone. Oh yeah, hi. Yeah, my name is Michael. I'm also a chartered accountant. I work at Black Seed Ventures as part of their finance department. Well, I am their finance department, so to speak. And yeah, we invest in pre-seed to seed startups, as well as also doing community work and other things as such.
No, are you audible? I have made you a presenter, so I don't know what it is. I think you'll need to download the app, Samuel. If you can please download the Teams app, and then going through that link that I sent in the last link that I sent in our group chat on LinkedIn, because you are you're not audible. Okay, let's see. Right here. Until Samuel is able to speak somehow, maybe we can get some do's and don'ts from the other panelists, if you wouldn't mind. So perhaps we can start with, let's start in the same order that we did the introduction. So Harriet, Andrea, and then Michael, please. What is one do and one don't, please don't use the same logic for both, that you see and is important to you when it comes to early stage finances? Harriet?
So I'd say a really good kind of do is to iterate your finances. And what I mean by that is sometimes we see, creating a cash flow, creating a forecast model as a tick done. I've got that. Now I move on to something else. And I know there's lots of tasks on your plate, but I'd say keep iterating things, because especially early stage, things change sort of so dramatically, sometimes week to week, that we need to make sure that those finances are essentially keeping score of the story that you're building and the business that you're kind of expanding and iterating. So that would look like practically, I'd say it might be on a monthly basis, weekly. I'm not sure, because it would depend how much things are changing and how tight things are potentially around cash flow, that sort of thing. But just keep a regular check-in, diarize it and get the support you need with it as well. And I would say is don't kind of shy away from asking all the questions, even if they might seem silly or like you should know them. I would always, seek out opportunities like showing up here and reaching out to people on a one-on-one basis who can support you, and just ask them the questions, because usually people don't mind being asked the questions, and there's no such thing as a silly question. So really do, as far as you can, be open to always being curious about things that you don't know about.
Thank you very much for that, Harriet. Andrew?
Hello. Yeah, so I would say definitely get an accountant from the beginning of your journey, so that they can guide you accordingly. I've seen many mistakes made with the general just setup of the business. So I always say get an accountant from the outset, make sure that you can that you set up the business correctly, and that you know how to record your financials to move forward. I would also, what I wouldn't do is leave your accounting last minute. I see too many clients coming a month before their deadlines to submit, and making a mess of their accounts from the very beginning of their journey, because they've left it so late to deal with the finances, which are really important.
Thank you very much. Michael?
To be honest, the answers given were pretty much the bulk of it. I think first and foremost, actually forecast. Some people don't even do that. They get a bit scared of numbers and they don't even forecast, or they don't forecast over a long enough period. So before you even get to Harriet's part, which is extremely important, where you do have to kind of keep going back to it and actually making sure you actually probably diarize time to continuously update it, actually think about forecasting and think ahead as first and foremost. And a don't, I would say, oh, you said not to use the same logic to come up with your don't, didn't you? I would I would say don't be afraid to sometimes be a bit prudent in your forecasting. Sometimes consider buffers, consider extras. Some people tend to be a bit light with some of the numbers that they tend to forecast or they budget for. And then when they come to look at their actuals compared to their budget, they're a little bit surprised. Maybe it's because maybe it's the accountant in me that says, be a bit more cautious. But yeah, definitely it's probably wiser to overestimate a little bit how much your expenses are going to be than underestimate it, especially when you're considering things like cash flow forecasting and so forth.
Thank you very much. And just before we go to Samuel, Michael, as a fund, do you guys have a template, a forecasting template, or some kind of model that you either have it published out there, or you dish it out to people anything like that?
Personally, no, but then there are a number of forecasting templates that are already out there. And so, you know, the business models we tend to come across are so different, and they vary, that yeah, we tend not to kind of give one size fits all. But yeah, there are quite a few out
Fair
there.
enough. Thank you. Samuel, are you audible now, buddy?
I think I'm all set up. Can you hear me?
Rock and roll. Yes, we can. Now, please introduce yourself, Samuel, and then fire away with one do and one don't when it comes to early stage finances. And if the others on the panel here would like to drop their link in the LinkedIn URL rather in the chat, and perhaps a quick intro as well for anybody who wants to reach out, that would be great. But take it away, Samuel.
Brilliant. Thanks again for having me again, and hello everyone. My name is Samuel Ajala. I'm founder or managing partner of Arthur Hampton Accountancy. I'm founder of ScaleUp CFO. I work as a strategic CFO and advisor to high growth startups and scaling businesses. And that could be anything from helping founders optimize cash flow, extend runway, or get investor ready. My background spans accounting, strategic finance, and I'm passionate about turning financial data into real business decisions. So pretty much excited to be here today. I have to say, my co-panelists have said most of what I've wanted to say, to be honest. I think the one thing I'll just add here is don't confuse growth with success. I've worked with many business owners who, from year to year, revenue has increased from year to year, but profitability hasn't. And so I guess that now links directly into actually knowing your numbers, understanding your margins, and understanding the business. Thank you.
That is an absolute stellar team, and I hope people will be able to make use of them at least in the next 43 minutes. So, for those of you that have just joined us, especially those on the live streams, just a quick reminder that this is Startup Finances Q&A 06. We've been doing our startup Q&As for just over 4 years now, and the idea is quite simple. We're trying to help founders go from startup to scale up with pretty much on-demand tailored advice that works for you, and that is delivered by people who've been there and done it, whether it's successful founders, operators like the panel that we have here today, or savvy investors who've invested and continue to invest in companies like yours. Today, we do this, the Finances Q&A, we do it once a month, and we're taking questions on anything that you think may help you make better sense of your finances. So just for argument's sake, you could be one of the main questions I keep getting time and time again. It's, for example, modeling. But you may want to know about cash flow or budgeting or profit and loss or payroll, employee benefits, taxation, bookkeeping, VAT, auditing, R&D, tax credits, loans, banking, fraud, projections, forecasting, template, and all that jazz. There literally is no wrong question, and there's no need to be shy because it's a learning curve for us all. So if you are on the live streams, just beware that we are unable to monitor your questions live, which means you'll have to join us here on Microsoft Teams. It's audio only, which means you can join us from anywhere via any platform or device. And if you're like me, you don't need to spend an hour in front of the mirror doing your hair. Now, in terms of wanting to join us here, whether you're on LinkedIn, YouTube, Facebook, or Instagram, you should have the link on most of those live streams. But if you can't access it, then simply go and visit our website, startuptoscaleup.club. Once you're there, you'll then be able to find today's session, which is Startup Finances Q&A 06. You click join. It's a quick registration that gets you a link to your email, and through that link you'll then be able to join us here on Microsoft Teams. When you're here, then simply drop your question in the chat. We'll then give you the mic, and well, and the floor is yours, really. Now, if your questions today are not on finances, then please save them for the other events we run. On Mondays, we do Startup Talent Q&A. On Tuesdays, it's Product and Tech Q&A. On Wednesdays, it's Growth. On Thursdays, it's Fundraising. On the second Friday of each month, it's UK Startup Law. And on the third Friday of each month, it's UK Startup Finances. They're all from 12 to 1 p.m. UK time. And you can RSVP to any of them via our site, startup2scaleup.club. And actually, not only that, but when you're on our site, you may also want to join our WhatsApp community. We've got some amazing groups of founders, investors, and operators that you can join. And it's obviously free, it's peer-to-peer. And at the top and bottom of our site, you'll be able to see a WhatsApp icon. And if you click on that, you can then join us. I will post it here in the chat as well, just in case. Now, we've got 39 minutes to go, so I think we'd better chop. I've put a question in the chat. This was sent to us. No idea how she found us, but she sent an email. So, the topic here is modeling operational costs for scaling startups. Their startup is a green tech startup producing eco-friendly building materials for construction companies. They're based in Edinburgh. And the challenge that they have is that they need to model operational costs for scaling production, but are concerned about underestimating the cost of labor, materials, and logistics. It related to Michael's do and don't. So the situation therein basically is that she says we're a revenue generating bootstrapped with plans to expand into multiple UK regions. So her question is, as a green tech startup, co-founders should put in brackets, so I'm assuming there's more than one co-founder, scaling production, how can we model operational costs accurately to reflect the financial impact of increased labor, material, and logistics expenses? What UK-specific considerations, such as regional wage disparities, supply chain logistics, cost trends, and energy efficiency grants, should we include in our projections to provide a realistic yet compelling financial outlook for investors? Oh boy, that's a mouthful. Thinking maybe we can start with Samuel, then Harriet, then Andrea, and then Michael, please. Let's try and keep it to a minute each, please, team.
Brilliant. Thanks, Anton, for throwing me into the deep end there. Excellent.
Somebody's got to do
it. We've actually worked in with some companies in the green tech where I think one of the last things you mentioned about possible incentives as well is that there are some grants specific for green tech. You can apply for UK government grants. I remember you in your plan you can factor in R&D tax credits as well and capital allowances when it comes to things like this. Generally, what I would do when it comes to planning is whoever's in this sector or facing a very similar predicament that she's in, they shouldn't scale. They shouldn't just scale costs linearly, right? Instead, they should break down the cost model. What I mean by that is like variable costs, fixed costs, semi-variable costs, right? And what you do is model this at unit level, so per ton, per unit, per product, and then project it by region or per output volume, right? I hope I'm not too technical here, but that's basically what you would do to get a pretty accurate model. I hope I haven't lost anyone there, but yeah, that's my 2 pence.
So actually, this is something that I have a bit of experience in. So before I set up my business, one of my roles was working as an FD for a large construction. I can probably say the name. There's no reason I can't. It's Tarmac, who's owned by CRH. I was working on their integrating acquired businesses and basically making them more profitable. So I can give you a few examples of just kind of like specific to the industry stuff that goes on. So I'm just picking out a couple of things. So you mentioned wage disparity. So what I'd say is in this sector, and this is a generalization, but people are very aware of what the competitors are paying, and people talk about who over there is, what they're paying here, etc. So what I would probably suggest you do is have a look at job adverts for similar types of roles in the regions that you're looking at, which might initially be Edinburgh if that's where you're trading from, and just be really aware of what that looks like on your local area, because things can be very competitive. And you'll also want to make sure that you have got scope to model in year-on-year increases potentially, because retention can be tricky. In terms of supply cost materials, this was sort of 2018, I think. I was working in this space, so I imagine things are fairly similar. But what I do know is that the big suppliers of materials tend to have quite big year-on-year cost increases. They tend to put out letters, at a certain point in the year and say, right, prices are going up by X%. So be aware of that. Look at trends in the past. This is probably data you can see. You could even look at accounts and stuff from other groups that are big and maybe have got data out there published to try and get a sense of it. There's probably reports actually, economic type reports on this as well, but basically expect, give yourself room for there to be year-on-year price increases. And yeah, some really good advice there about going down to unit costs. If you're looking at logistics as well, you've got at some point you're going to have to make a decision whether you're outsourcing or whether you're going to run your own fleet. And I'd just be very careful when you're running your own fleet that you cost it all out, and obviously that becomes then almost like a revenue generating activity. So you'd want to make sure your fleet is kind of being run profitably, or sometimes it makes sense to outsource. I was dealing with two, the different businesses I was working on had different approaches to this. It tended to be maybe more favorable to outsource it, because then you've got flat costs and somebody else has the responsibility for dealing with that. But I know sometimes people like to do it in-house if they think that they've got, the ability to do that. So yeah, if you ever want to chat more about this, I'm happy to kind of, talk to you on a one-to-one basis, just putting it out there, because it is a sector that I've got a bit of experience.
Amazing, thank you. And I think now it's Andrea, and then last but not least, Michael, please.
Yeah, a very long question with lots of elements. I'm just going to focus on the fact that as a startup, you're going to be doing a lot of research and development in your business, and therefore I would take that opportunity to make sure that you are recording everything as much as you can, so that you can make a great claim at the end of the year in research and development on what you're actually doing with your green tech startup. You'd be able to, if you're investing a lot in growing this business, then there should be great returns on your comeback with some R&D.
From my end, I think a lot of what's been said pretty much covers it. I would say if I'm an investor and I'm probably looking at your forecasting, what your scale up forecasting, probably without the grant to begin with, just to see, are you able to sustain yourself without the grant? Because what happens if you don't get the grant? And then maybe a forecast that, another forecast that includes the grant. And so therefore just kind of what the differences are. With regard to the other bits and bobs, yeah, I think everything's been said. I'm not going to say much more that's going to be value add compared to what everyone has already mentioned.
Thank you very much. And by the way, if you feel you don't want to repeat what others said, or if you haven't got anything to add, it's way better to do that than just say something for the sake of it. So That's commendable. Thank you, Michael, and thank you to all the others too. Right, we've only got 30 minutes to go. I feel I need to remind some people on the live streams not to be that shy, because here's what, I can't monitor your questions there live. So there's no point of you sending messages or commenting or emailing or whatever is happening, because unfortunately we just can't monitor your questions. So if you'd like to ask our panelists anything, all you have to do is join us here on Microsoft Teams. There's links on all the live streams, whether it's LinkedIn, YouTube, Facebook, or Instagram, or simply visit our website, startup2scaleup.club. You'll there be able to easily find today's session, which is Startup Finances Q&A 06. You click join, it's a quick registration, that gets you a link to your email. And through that email, and through that link on that email, rather, you'll then be able to jump onto our audio-only call. And being audio-only, it means you can join us via any device or platform, and you don't need to turn the camera on either. In terms of today's questions, they're on finances, obviously. So, and this is UK finances, by the way. Just a reminder, this is being recorded, and none of the stuff that we give here, it's financial or legal advice. This is simply based on these are our opinions based on the experience that the panelists have had. In terms of questions and specifics of it, it could be anything from cash flow to, I don't know, profit and loss budgeting, payroll, employee benefits, taxation, bookkeeping, VAT, auditing, R&D, tax credits, loans, banking, fraud, projections, forecasting, and all that jazz. There literally are no wrong questions, and there's no need to be shy. If, however, you've got questions that are on other topics, then save them for the other events we run. By the way, next week is going to be our last week before we break for the summer, and then we resume on week commencing 8th of September, so about 5 or 6 weeks off. In terms of the regular sessions we have, it's Monday's talent, Tuesday's product and tech, Wednesday's growth, Thursday's fundraising, second Friday of each month, it's UK startup law, and third Friday of each month, it's UK startup finances. They're all from 12 to 1 p.m. UK time, and they're available via our site. You can RSVP or register there on startup2scaleup.club. And actually, when you're there, why not join our WhatsApp community? We've got some amazing groups of founders, investors, and operators, and you can find that WhatsApp icon at the top and bottom of our site. We'll now go on to the second question. This is about financial control requirements for grant-funded startups. The startup, it's a biotech startup developing diagnostics, tools for infectious diseases. They're based in Cambridge. The challenge they have is that they've got some public sector grants, but struggle with financial controls to meet reporting and audit requirements. Well, that's a bit tricky. So the situation for them right now is that they're pre-revenue, reliant on grants and angel investment. And then she goes on to say, I'm one of 2 co-founders, and as a grant-funded biotech startup, what financial controls should we implement to meet the stringent reporting and audit requirements of UK government grants and other public sectors such as Innovate UK? How can we ensure accurate cost allocations, proper documentation of expenditure, and timely submissions to avoid funding clawbacks or reputational damage? We kind of touched it a little bit in the previous question, didn't we? About this, how about we start this one with Michael, and then Andrea, then Harriet, and last but not least, Samuel, please.
Yeah, I think this goes back to your do's and don'ts, and that we mentioned earlier, and specifically what Andrea mentioned. You need someone in finance to kind of work alongside you, My assumption is probably as co-founders in biotech, you're probably not accounting or finance savvy, and so therefore that's not something that you care to think about or really get involved in. And so probably your first hire or something that you need is maybe someone such as Harriet, who's a fractional CFO, and can kind of come in and actually just kind of set up that part for you fully. Maybe you don't need a CFO in all the time, and so you need someone part-time or so, but definitely getting someone who's able to kind of get that side of things set up for you correctly and properly, because as you mentioned in your question, you will miss your submissions, you will end up with potential clawbacks with whoever's giving you grants, and it will destroy your reputation if you don't get that side of things. A lot of startups, as Anton mentioned in the beginning, mess up because they don't set up their finances properly, or they're reporting to particular grant funders correctly and end up in a whole raft of trouble. So definitely maybe get someone who can come in on a part-time basis and support with that.
Thank you. Andrea?
Okay. Yeah, I would definitely say if you're being grant funded, make sure that you're spending that grant money on what you said you was going to be spending that grant money on. It's really important that you ring fence that money and make sure you spend it on that. If you're having to allocate things to different cost centers, project codes or whatever, I would ensure that you're using some form of software or something so that you can actually allocate these things correctly. As Michael said, you need to ensure that any grant money that's being given to you is actually used for the purpose that you got the grant for, and then therefore you need to ensure that you're spending it correctly. Use simple systems like Dex, HubSpot, to upload your receipt so that you've got all the paperwork at hand, so that when you're audited later on down the road, what you spent your grant money on, that you literally have all that information to hand. It's just really important that you spend that money correctly, and that, so like Michael said, you don't spoil that reputation that you have. That would stop you from getting future grants.
Really good suggestions here. I'd say the other thing to do is, yes, have your systems, and that's the first step, is make sure you've got good chart of accounts, something like Xero, and attaching invoices and receipts there. I would also always have a separate folder basically for all of your Innovate UK stuff. It is separate reporting from your commercial reporting because of the intricacies of, if you're using percentages of people's time. What you want to do is make sure you've got that documented really well, because they could come to you further down the line and you're not going to remember how you allocated things. So you need to have the workings there of, it might be a case if you've taken the payroll files or the line item for costs of somebody's salary, and then you've allocated it and then put so much into the claim because you claimed, a percentage of somebody's time. If it's timesheet based rather than a percentage of wage, you need that data. Basically, just make sure you've got all the data in granular levels of detail, so that if somebody asks you, you just go to the file, find the little section, and then you can just go, yeah, here it is. This is the working we used.
Thank you, Samuel.
Fantastic. Again, it's just better controls and just having a system for your accounting processes. For example, one of the things I would probably advise in things like this is to set up a project-based accounting very early. So you've got QuickBooks, you've got Xero. You can set some of these up by class projects or even tracking codes. Another thing you can do as well is time tracking for staff costs and even proper cost allocations. I think things like this just gives better confidence that you are actually spending where you say that you are spending. Thank you.
Thank you very much for that. If anybody else wants to drop any questions on your finances and get the answers that work for you, just drop them in the chat. We'll now read out the next question. It's in the chat, but I'll read it out loud for the live streams. So this is about being tax efficient. A tax. Okay, so the topic is tax efficient exit for startups selling to international buyers. They're a tech edutainment startup creating immersive AR experiences for children. They're based in Brighton. The challenges that they have is we're about to get an acquisition offer from a US-based buyer, but we're concerned about the tax implications of an international deal. Situation they're in is that they're early revenue generating, bootstrapped with initial traction in the UK. There are 3 co-founders, and the question basically is, as an edutainment startup being acquired by a US buyer, how can we structure the exit deal to minimize tax liabilities for UK-based founders and investors? What specific steps, such as double taxation reliefs, share sale agreements, and obviously remittance planning should we take to ensure compliance with both UK and US tax regulations whilst optimizing net proceeds? Jesus Christ. This is a question that you'd get some Goldman Sachs lawyers to come and work for a week for you. Let's start with Andrea, then Harriet, then Samuel, and then Michael, please. Any thoughts on this?
Yeah, it's a lot. Okay. Oh, where will we start?
Basically, the bottom line is: are there any ways to do this so that it doesn't impact UK taxation? And I guess, are there, as bad as it sounds, I don't want to use the word loopholes, but is there something that they can do to be at an advantage rather than disadvantage?
Yeah, so if they're selling the business, then yeah. How long have they had the business for? I mean, will determine certain factors. Because they could claim BADR, business asset disposal relief, which used to be entrepreneurs relief. So that will help them, and that, but they need to have owned the business for 2 years or more for that to apply to them.
Sorry to interrupt, Andrea. Their LinkedIn page says that they've been, i.e. the page, was whatchamacallit, was set up in 2021. So I don't know whether that's when. So I'm not sure whether that's when they started the business, but at least the LinkedIn page says 21. So I've no idea.
Yeah. Well, I mean, if they have been going for 4 years, that they'd be entitled to this, and that will reduce their CGT on selling the business. Yeah, that's a lot. That's all I'm going to answer to that.
Fair enough. Thank you very much for that, Harriet.
So in this situation, I have always looped in a UK, it's not my area basically, a UK tax advisor and a US tax advisor. Get everyone on a call together and we thrash out the details, and it's a bit of a project. There's some firms that obviously have presence in the US and the UK, so they can maybe cover both with their different teams. But essentially, I'd say, yeah, with the international dynamic, make sure you've got coverage on, of both sides in the room, and go, potentially, it's not necessarily knowledge that your regular accountant or CFO is going to have. Some people will be comfortable with it, or maybe someone else in their team will be able to advise on this. But just be aware it's a separate thing.
What sort of money? So what sort of money should one put aside for something like this then, Harriet, if you're needing to go to a couple of people? And the reason why I ask this is that, so at the beginning of the question, they say they're about to get the offer. So I'm assuming, and actually it's a good thing to always assume until your money's in the bank, always assume that it's not a done deal. So when you're not sure, then you need to put money aside because I'm assuming these tax experts, they won't advise you on a pro bono or some kind of no-win no fees at the start, so they'll want the money up front no matter what happens. What sort of money should somebody put aside to something like this, Harriet? You know, or
I don't know how big the deal is. It's going to be dependent on how big the deal is to an extent, I think, and how many people are involved and different situations. So it's hard for me. Initially, I'm thinking that, and again, I don't know what your size is. So I'm thinking probably, 5 to 10K maybe. If you know people and you've got connections, you might be able to get a bit of something. Pro bono. I don't know. The thing is, it's going to be balancing it with the tax liability. I would always say, find out maybe what it's going to cost, and then maybe how much you might be sense check it, because sometimes it might be worth paying the tax if the advice is going to be very expensive. But it depends what's to play. So the worst, it might be a case of looking at what's the worst case scenario if the whole lot's taxable. What does that look like? Okay, well now let's go and get some advice and see how we can structure this. So it's difficult to say because I don't know what numbers we're talking about, but essentially the due diligence and the legals is part of and structuring it right is part of the deal. I mean, sometimes it's a case of going, okay, well, we need to pay some tax because actually we're selling, and that's part of, I'm getting a chunk of money, and that's part of it. So there's going to be an element of some tax to pay probably. It's something probably just to have some early conversations with. You can probably talk to somebody
You go on, sorry.
I'm just going to say you can probably start a conversation with somebody for that initial sort of half an hour call before you get into an engagement. So that that'll when you say your ballpark figures you're talking about and broadly what's going on, I'm sure that will help you to work out what's the right level of investment into it.
I hear you. So bottom line is you need money to make money, as simple as that. I think we said, Michael and then Samuel, please.
It's pretty much what Harriet said. This is deal specific, so you're going to need to reach out to advisors. There are tax specialist advisors, so people who have signed up, who had their CTA and so forth, and they'll probably be better placed to advise you on such things. With regards to how much you're going to need, again, you're going to need to get a quote, because and then the likelihood is for the individuals as well, they'll probably need to speak to their own personal accountants to also talk about their own personal tax implications as well. You have to look at the deal as a collective, as a whole, and then probably individual tax implications. So this is not something that I can kind of just generically answer. It's still specific, and you're going to need specific tax probably specialists to come in and answer that question.
Thank you very much, Samuel.
This is an entire project. Basically alluding to what everybody has said, this is an entire project. But I will add this. We had a very similar project that we were working on very similar to this only about 3 weeks ago. And we had to reach out to our US team and even our team in the UAE to work in collaboration to find a solution for this particular client in question. And what you will find, and one of the things I would advise anybody going in this situation is, it would be good for you to find somebody that deals with all regions that you're currently working with. It becomes of a bit of a headache when you're trying to deal with maybe a US an accountant or a UK accountant, and you're trying to juggle between it. It's good generally to have somebody, an organization or firm that actually oversees and are able to advise you accordingly. I think one of the benefits that you'll find as well, why it's very important, is that in this deal that we're working with, it talks about, within the question, I think it mentions something about UK-US double taxation. And in layman's language, and this is to everybody that's listening out there, that basically means that the taxes that you pay in the UK, in the US, you may be exempt from that in the UK. So this particular client actually got a rebate, got a refund because of this UK-US double taxation treaty, which ensures that you don't pay tax in the US and you don't pay tax here in the UK. And this is why it's important that you have a holistic view because there's a danger of you potentially doing it in the US, paying tax in the US, and then coming to UK and paying taxes in the UK, but nobody to oversee it or to actually realize, no, actually, you don't need to pay this tax because you actually pay that over there in the US. So, yeah, that's my 2 pence. Thank you.
All rock and roll for them. Right, yeah, well, thank you very much for that. The only thing I would add is have a look at some local agencies. For example, I know in the past, Grow London has helped companies either expand into business overseas or with M&As and so on. So there may be some kind of public sector body or organization who might, if not give you all the advice that you need, at least point you in the right direction so that you are better informed of what to expect without having to cough out, all this money up front and you don't even know if the deal's going to go through. So might be worth looking into that. We've got 9 minutes to go. I think we've got time for 1 or 2 more questions. So please do drop them in the chat if you are here. For those on the live streams, you need to get onto our Microsoft Teams call because we can't monitor your questions there. Quickest way to do that is via startup2scaleup.club. When you get on that site, again, startup2scaleup.club, find today's session, which is Startup Finances Q&A 06, click join, quick registration, that gets you a link to your email, and through that link you can join us here. It's audio only, which means you can join from anywhere via any platform or device. Question 4, it's about implementing fraud prevention in e-commerce. They're an e-commerce startup selling personalized jewelry. They're in Aberdeen. The challenge they're currently having is that they've experienced an increase in fraudulent online orders, leading to financial losses and chargebacks. So the situation basically they're in as a company is that they're revenue generating, bootstrapped, and they've got a growing customer base. They're a husband and wife team, so co-founders. As an early stage e-commerce startup, how can we implement fraud prevention measures to detect and block fraudulent orders before they impact our cash flow? Are there UK specific tools that we should prioritize, and how can we balance fraud detection with maintaining a seamless customer experience? And then she's put in brackets, I've made a few Google searches and came across address verification systems and 3D secure protocols. Maybe we can start with Samuel, Andrea, Michael, and last but not least, Harriet, please.
Thanks, Anton. This question.
Let's try and keep it a minute each, please, team.
Fantastic. This question, if I'm honest with you, the first thing that came to mind is maybe hire a cybersecurity question. I mean, a cybersecurity organization or firm to come into your organization and do an audit. Outside of that, honestly, I can't add too much to this specifically.
Fair enough. Thank you very much for that. I think we said Andrea, didn't we? Yep, Andrea, then Michael, then Harriet.
Yeah, e-commerce. E-commerce fraud. So because the customer's not there and you're present, yeah, not really au fait with this one. Can't really answer this one.
Fair enough.
Yeah.
Michael, and then Harriet, please.
Yeah, this similar to what Samuel mentioned. You probably need some form of I'm not sure who, I guess, who's looking at your IT or who's running your IT. I'm assuming it's being done by yourselves. You're probably going to need some form of external support or expert to kind of come in, maybe who can either help you tighten things up, who can recommend what softwares or what who to kind of go through and what to utilize. But yeah, you just, I'd assume probably getting some form of external support. I don't have much more value add on top of that.
So I would say, in terms of your, and I don't know what platform you're using for the payments, but my initial thought is make sure you're using one of the big names like Stripe or WorldPay, because they will have invested in lots of fraud protection stuff that's going through that. And sometimes, we avoid things like Stripe because maybe they have bigger fees that they take a chunk of. But if they are doing, lots of stuff on their platform that is helping with fraud prevention, it's probably worth, using them and losing that little slice of revenue to them. But yeah, it would depend what you're actually using, I guess. So that's all I can add, really.
Absolutely. No, I just to reiterate that, I personally don't think this can be sorted with just having a cybersecurity expert. You definitely need to kind of put your faith in some of those big players in the payment industry and find a way so that they're the one that bear the pain if things go wrong. And yes, they do often take bigger chunks, but you'd be surprised sometimes because they're big enough, they don't have to. So that's something to work on. That's what I would focus. We've only got 4 minutes, and I'd appreciate it, because I don't want to keep you too long, but I'd appreciate it if we can quickly answer this next question. I'll put it in the chat. So this is about understanding the cost of invoice finance. This is something we often get asked on other Q&As that we have, and despite asking them, look, come and join us on the financial one, they still keep coming back to the other Q&As. So this person joined us, I think it was on a product and tech session, and then I asked them to join us on the finances, but they sent a question instead. So, understanding the cost of invoice finance. The startup is a SaaS startup providing workflow automation tools for legal professionals. They're based in Leicester. The challenge they have is we want to use invoice finance to bridge cash flow gaps, but I'm concerned about hidden fees and its overall impact on profitability. So they're revenue generated, seed funded with a growing customer base. And then they've gone to explain their co-founders, both finishing their masters. So I'm guessing still studying. As a SaaS startup considering invoice finance, how can we evaluate the full cost implications to ensure it supports cash flow without eroding profitability? What UK specific factors such as arrangement fees, service charges and interest rates should we account for when comparing invoice finance providers to make an informed decision? So maybe we can go on to Michael, Samuel, Harriet, and last but not least, Andrea, please.
I would say first and foremost, a lot of the factors should probably be in the quotes that some of these providers give to you. A lot of the, I guess, headline ones, but definitely read the fine print to see what kind of clauses or particular fees might be kind of hidden in that fine print if you're kind of trying to look at things to consider and compare. I'd also, I guess, probably because you're looking at invoice financing, I'd have some form of scenario analysis. What happens in a best case scenario with regards to, I guess, your invoice days and so forth, and a worst case scenario for your invoice days. And then, yeah, just constantly monitor and review and see if you can renegotiate when scenarios or things switch up. Yeah, so that's all for me.
Fantastic. Thanks, Michael. I don't want to regurgitate or repeat what was said before, but you do have to check all of the paperwork. And because this is not as straightforward as the usual financing, worked with a client once on something like this, and it was the first time I heard of the recourse and non-recourse. And it's basically who carries the risk if the client doesn't pay, if you're basing it on invoices, right? Are there any minimum invoice volumes required in terms to for the fulfillment of the finance? And I think just some of these questions in itself would allow you to do scenario planning, look at the best worst case scenarios, what could potentially happen, to determine whether it's profitable for you or not. But I think the basis of that is to actually look at all of the documentation and all of the requirements as you begin to create scenarios from this. Thank you.
I think it was me next, but I've lost track. Sorry. I would just say, I just add in there, essentially, this is quite a good approach. I did one of these earlier in the week, actually. I see it as a three-way kind of conversation. So, my example from earlier in the week, talked to the two co-founders, needed some injection of cash, put them in touch with a broker. The broker came back with some options based on their rating and their performance and their position, and then we basically modeled that into the cash flow and the profitability, the P&L, and then we were able to come to a decision and make sure that was modeled through the cash flow in terms of the scenario. So if you've got somebody in finance working for you, it's probably a good thing to loop them into the conversation on as you're talking to providers that are giving you options.
And how difficult was it to get to invoice financing, Harriet?
I think if you are the sort of business that has maybe project-based activity, so there's the money's coming, but it's just a case of when it drops in, and there's maybe some delay, and perhaps you've got some costs you need to fund up front before you get paid because of the industry. It kind of lends itself to that, because they kind of realize, okay, it's not too risky, it's not too expensive necessarily in terms of the cost of the debt or the borrowing, and a fairly flexible system. I think there are sometimes caveats around like what size business you are, how much revenue you're turning over, and they will obviously look at the footprint of the company in terms of profit and risk, etc. So I'd say it's probably just a case of having the big conversations to get the quotes. But if your revenue lends itself to this, I think it's quite attractive, and it's quite a suitable form of cash facility sometimes.
And Samuel, you mentioned the recourse clause. How damaging is that? Like in terms of if your client ends up not paying, is that a common thing that the lenders do that you then have to cough it up, or do they themselves? Because back in my recruitment agency days, I remember I'd get approached like on a regular basis by lenders and brokers that they would take the risk if the client didn't pay. But from what I've just heard from you, that might have changed now.
Yeah, if I'm honest with you, thankfully, nobody that has done it has actually end up not paying, and thankfully clients have ended up paying. But the consequences of not actually paying can be quite severe. Again, it depends what's on the documentation, because all of it is not the same, right?
Devil's in the detail.
Exactly. And one of the things I would say as well, even when getting into one of these, is that they do lots of checks on your business. If you've got a CCJ in your company, for example, it's going to be a problem. So they will do the regular checks, not necessarily on individuals, but more so on the company itself and how it's been performing before they actually release.
Quite intrusive.
Yeah.
Thank you very much. Sorry, Andrea. Anything to add on this now?
Just to make sure that you're including all these extra charges that come to filling your product into your cash flows, and making sure that you're taking in account of the extra payments that you're having to make to get your money. Just make sure that that's in your forecast and your cash flow, just to make sure that your product's still viable and you can still make money.
Note down everything. Well, that's brilliant. Thank you very much. My apologies, team, that we are 5 minutes over the line. Sorry. However, I really appreciate your time today and your amazing input. If you've got time, I would love to hear some parting words from yourself. So perhaps we can start with the ladies of the house, Andrea, Harriet, and then Michael, and last but not least, Samuel, please.
Okay, to everybody, and I say it all the time, I truly believe that unless you understand your numbers, you can't grow your business. And so it's really important that you get an accountant on board or someone with financial knowledge on board so that you can make the right decisions for your business to move forward. Looking at those numbers, understanding those numbers, and making business decisions based on those numbers is going to help your business to grow.
Thank you very much. Harriet?
I'd just say on that last point around cash flow is it does sound quite scary, doesn't it, looking into borrowing and facilities, but actually your best bet is to investigate it before you desperately need the money, because at that point, I don't know, maybe you've had some bounce payments and that's going to show up when they look at your bank statement. So it is a good thing to look at whilst you're still in a good shape, but you perhaps forecast that in the next few months there's going to be a bit of a downturn or there's going to be a cash shortage, to make sure you're presenting your business in a good light rather than actually we're desperate and we need it now, because it's going to reduce how much you can maybe borrow and maybe it's going to cost you more to borrow. So just add that in.
Thank you. I think we said Michael and then Samuel, please.
Yeah, just to reiterate what we've previously mentioned, which is constantly be looking over your financials, looking over your making sure that your financial reporting is done for your historic information, and that your forecasting is up to date and relevant with all the information, especially those who are also going out to VCs or to angels and trying to get funding. You will be asked questions. Yes, investors are aware that sometimes projections can be a bit airy-fairy, but they will still look and check to make sure that you are actually understanding of what your numbers are and what you're trying to project, or what you're saying is making sense.
Fantastic. I think all of my co-panelists have said it all. In terms of executing it, honestly, just make sure you find 1 day a month or a few hours a month at the end of the month just to review your numbers. What does that look like? Look at your profit and loss. Look at the progress month upon month. Look at the cash in the bank, because profit on your P&L does not represent the cash that's in your actual bank account, right? And do that on a monthly basis. Just get into a habit, get into a discipline. The reason I'm saying this, because I know there's a lot of us that are just starting up. We feel that we can't afford accountants. We feel that we can't afford CFOs, fractional CFOs. And so we kind of just wing it. But I think if you create some kind of discipline within the organization, that you're going to look over your months, over your accounts once a month, it will go a long way to understanding, as opposed to what most people do, is look at their accounts 1 year after they've started, when it's the year-end accounts are due. By that point, any changes you want to make, it will be too late. Thanks again, Anton, and thanks to my co-panelists. Hopefully we see you soon.
Yeah, so
well, thank you very much. Go on, sorry.
Sorry, yeah, on the back of what Samuel said, just to reiterate, finance isn't your enemy, people. Like, it can be scary, and a lot of people just want to kind of bury their head in the sands and just get on with the other bits and pieces. But yeah, as everyone said, finance isn't your enemy. It's just part of making sure everything is clean and hygienic. So I just wanted to reiterate that.
Yeah, thank you very much. Really appreciate your input and your time today, team. I really enjoyed your answers and found them very useful too. Huge thanks to everyone that tuned in on the live streams. Next time, join us live here on Microsoft Teams instead. It's audio only. By the way, next week, it's going to be our last week this side of the summer. We're then taking some time off, about 5 or 6 weeks, and we resume on the 8th week, commencing 8th of September. Just a reminder, we run 6 regular sessions helping startups, or trying to help founders rather, go from startup to scale up. And we do that for free. We help you on talent, that's Mondays, product and tech Tuesdays, growth Wednesdays, fundraising Thursdays, UK startup law second Friday of each month, UK startup finances third Friday of each month. They're all from 12 to 1 p.m. UK time. They're all available on our website that you can register an RSVP basically via our site, startup2scaleup.club. When you go there, pick your preferred session and register, click join and then register. Whilst you're also, whilst you're on our site, you may also want to join our WhatsApp community. We've got some amazing groups of founders, investors, and operators that you can join. At the top and bottom of our site, there's a WhatsApp icon you can click on and join through that. As far as my parting words are concerned, just remember, the startup journey can be both exciting but also quite challenging. So try to have some fun in the meantime and be kind to yourself and everyone else for that matter too. Otherwise, again, thank you. Have a great afternoon. Have a good weekend. And hopefully we'll see you on Monday for Startup Talent Q&A. Thank you and God bless. Bye-bye for now.
Thank you. Take care, everyone.